Welcome back to the Malaysia Money Matters show. It's February 13th, 2025, and we've got quite a bit to get through today.
Yeah, lots to cover.
We're going to be diving into a whole bunch of recent financial news
Yeah.
with a focus on how these developments could impact your investments.
For sure. It's an interesting mix. Company updates, market trends, even some global events, with the potential to ripple all the way to Malaysia.
Okay, so let's kick things off with some company news. First up, we've got RichTech Digital BHD. They specialize in electronic reload and bill payment services. You know those little kiosks you see everywhere?
Yeah.
Well, they're getting ready to go public on the ACE market.
Interesting.
And their financials look pretty promising. They brought in a net profit of RM 939,000 on RM 1.77 million in revenue last quarter.
Yeah, that's solid.
Yeah. And here's the interesting part. Even though their overall sales dipped a little, their commission revenue actually climbed by almost 18%.
Oh, wow. So even though they sold less, they made more money from each transaction.
Exactly. It seems like they've got a good handle on their costs
Yeah.
and a smart strategy to maximize those profits. You're hoping to raise RM 20 million
Right.
from this IPO. So
Yeah.
definitely want to watch
Yeah.
when they debut on the 17th.
Got it.
Now, speaking of impressive comebacks, AirAsia's parent company, Capital A, is showing some really strong signs of recovery. Their passenger numbers surged by 9% last quarter, reaching over 16 million.
That's a big jump.
Yeah, that is.
They're almost back to pre-pandemic capacity now, operating at 84%, with the healthy load factor of 88%. So basically their flights are pretty full.
Yeah, that's always a good sign. Shows there's strong demand.
Yeah, and what's interesting is their passenger growth is actually outpacing their capacity increase.
So they're filling seats faster than they can add flights.
Precisely. It shows they're really in tune with market demand and
Whoa.
operating very efficiently.
Now let's switch gears a bit over to the telco world. There's been a bit of a shakeup at CelcomDigi. Axiata Group's CFO is joining their board as a non-executive director.
Okay. And Axiata is a major shareholder in CelcomDigi, right?
Right. They have a 33.1% stake.
Mm.
So this move could signal a closer relationship between the two companies, maybe some interesting collaborations or some strategic shifts.
Yeah, could be worth keeping an eye on that.
Definitely. Now, next up, we've got a big win for construction company Benastra. They just landed a RM $250.37 million contract to build a massive data center in Cyberjaya.
Wow, that's huge.
It is.
So this is a 6-story data center for Ames Group. It's a sign that Malaysia is really becoming a prominent digital infrastructure hub. Cyberjaya in particular is attracting a lot of attention in the sector.
So it's good news for Benastra, obviously, but potentially good news for Malaysia's tech scene as well.
Right. Shows confidence in Malaysia's ability to support the increasing demand for data storage and processing. And that demand is only going to keep growing.
Absolutely. Okay, now here's some news that might make you want to raise a glass. Carlsberg Brewery, Malaysia, is proposing a record dividend of 35 cents per share for the last quarter. That brings the total for the year to a cool RM1 per share.
Wow, that's impressive.
Yeah, it is.
That's their highest dividend payout in 5 years. Definitely signals confidence in their future prospects.
It does. However, they are predicting a tougher year ahead in 2025. They're citing challenges like intense competition in the Singapore market and the timing of Chinese New Year celebrations.
So enjoy the dividend,
Yeah.
but maybe keep an eye on those potential headwinds.
Definitely some things to consider. Now, in other news, it looks like biscuit maker Hoopseng is having a moment. Their share price went up after releasing some better-than-expected quarterly results.
Interesting. We'll have to wait for the full details. But this positive movement suggests continued strength in the consumer goods sector.
Which is always a good sign
Yeah.
for the overall economy.
Yeah, definitely.
Now let's talk about IGM Corporation. They're making a major move into the logistics sector, investing RM 460 million in a brand new logistics hub in Sungai Buloh.
That's a significant investment.
It is. It seems they're looking to diversify their portfolio and tap into a high-growth sector. The logistics industry is booming thanks to the rise of e-commerce and global trade. And this new hub is strategically positioned to capitalize on that growth.
Makes sense. And they've already secured a major tenant, right?
Yes, they have. The hub will be leased to Storio, a company with strong connections to key players in the property development scene.
So it seems like they've done their homework and are setting themselves up for success.
Okay, now for a quick profit check. Malaysian Pacific Industries is selling 2 pieces land in Penang for RM 140 million.
Oh, wow.
And they're expecting a net gain of almost RM 100 million from this sale. That'll significantly boost their earnings.
That's a nice chunk of change.
It is. They've said they're selling because the land is surplus to their needs. They've stopped manufacturing operations there.
Smart move. It's always good to see companies strategically managing their assets.
Absolutely. Now let's shift gears to the exciting world of electric vehicles. Proton's new EMAS 7 is already making waves. It's become the best-selling EV in Malaysia in just its first month.
Wow, that's impressive.
It is.
Over 4,000 bookings in a single month. That highlights the growing demand for EVs in Malaysia and shows that Proton is really tapping into that market.
So it's a potential win for Proton, but also a win for the push towards more sustainable transportation in Malaysia.
Definitely. It's encouraging to see this shift towards EVs gaining momentum.
Yeah, and as the charging infrastructure improves and battery technology advances, we can expect to see even more growth in this sector.
For sure.
All right, finally, let's talk about RGB International, a company that makes electronic gaming machines. They're looking at some strong growth potential, thanks to their strategic expansion in the Philippines and Cambodia.
Interesting.
Yeah.
So their focus on these emerging markets is paying off.
It is. Yeah, and they're even considering
Yeah.
further expansion into Thailand and Japan. Yeah. And Philip Capital has issued a buy call on their stock, suggesting it's currently undervalued.
Could be an opportunity for investors who are looking to get in on the ground floor.
Possibly. But, as always, do your research and make sure it aligns with your investment goals and risk tolerance.
Absolutely good advice.
All right, now let's zoom out a bit and take a look at some international and political news that could have implications for Malaysia.
Sounds good. There's certainly a lot happening globally that could impact the local economy.
So first up, there's been some talk about volatility in the ringgit. What's the story there?
Well, Bank Negara Malaysia, our central bank, has stepped in to reassure everyone that they're ready to curb any excessive volatility in the ringgit. They're emphasizing Malaysia's strong economic fundamentals and assuring investors that there's no need to panic.
Okay.
This comes at a time when global markets are a bit jittery, particularly due to some of the recent trade policies coming out of the U.S. under President Trump.
Right. And on that note, there are growing concerns about the possibility of steel dumping in Southeast Asia.
Exactly. Experts are warning that U.S. steel tariffs could lead to more steel products being dumped in our region, which could potentially hurt Malaysian producers. MISIF, the local steel industry group, is calling for the government to take swift action to protect domestic players.
So it sounds like a potential trade war is brewing.
Yeah.
How could that impact the Malaysian economy as a whole?
Well, it's definitely something to keep an eye on. If Malaysian steel producers are undercut by cheaper imported steel, it could lead to job losses and a slowdown in the manufacturing sector. On the other hand, if the government implements protective measures, it could lead to higher prices for consumers. It's a delicate balancing act.
Yeah, definitely a complex situation. Now, shifting our focus to China, their rural banking sector is undergoing a massive consolidation. What's happening there?
So hundreds of smaller banks are being merged into larger ones. It's a move aimed at addressing financial risks and strengthening the overall banking system. However, some analysts are worried that this could create larger, more complex institutions that might be harder to regulate.
So potentially a good thing for stability, but also a potential increase in systemic risk.
Yeah, that's a good way to put it. It's a development worth monitoring because any instability in China's financial system could have ripple effects throughout the region, including Malaysia.
Right. Speaking of potential instability,
Yeah.
there's been a new development in the ongoing situation in Gaza.
Right. Egypt has announced its own vision for the reconstruction of Gaza, which is quite different from the approach proposed by the U.S.
Oh, okay.
This highlights the complex geopolitical landscape in the region and the potential for continued conflict.
Yeah, it's a reminder that geopolitical events can have a real impact on financial markets, even if they seem far removed from our daily lives.
Absolutely. Uncertainty breeds volatility, and investors tend to shy away from markets perceived as risky.
Okay, so we've covered a lot of ground already, from company developments to potential global headwinds. What are some of your key takeaways from all this? And what should our listeners be paying close attention to in the coming weeks?
Well, I think the biggest takeaway is that Malaysia's financial landscape is incredibly dynamic right now. We're seeing a mix of opportunities and challenges, both domestically and globally.
Yeah, it's a real balancing act, trying to capitalize on growth while also navigating potential risks.
Exactly. So in terms of what to watch for, I'd say keep a close eye on those global economic indicators we discussed, things like U.S. inflation and the potential for those trade wars, those could have a significant impact on the Malaysian economy.
And locally. It's important to stay informed about how companies are adapting to these global shifts and identifying new growth opportunities.
Absolutely. Companies like Proton, AirAsia, and RGB International are showing that it's possible to thrive even in uncertain times. But it's also crucial to be aware of potential challenges, like those facing Carlsberg in the Singapore market.
So stay informed, be adaptable, and don't be afraid to diversify your investments to spread the risk.
Excellent advice. And remember, knowledge is power when it comes to making sound financial decisions.
That's a great point to end on. It's been a fascinating deep dive into Malaysia's financial landscape. Thanks for joining us on this journey, and a big thank you to our expert for sharing such valuable insights.
It's been my pleasure.
Don't forget to subscribe to the Malaysia Money Matters show so you can stay ahead of the curve and make informed decisions about your investments. Until next time, happy investing. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.